Don't fight the Fed. And we know not to do this because the Fed controls the money. And guess what? It's very clear throughout history you don't want to fight the Fed. You didn't want to fight the Fed during COVID when we saw that mega boom. You didn't want to fight the Fed last year when we saw them engage in the beginning of raising interest rates in the beginning of QT. And you didn't want to fight them at the top of the dot-com bubble when they started hiking. You didn't want to fight them before the great financial crisis when they started hiking. You didn't want to fight them when they started hiking at the end of 2018, or stopped hiking rather at the end of 2018. You don't want to fight the Fed. And I get it. People don't want to take the Fed at their word. They want to follow their actions, was an argument I heard today. But let's break this down. Let's actually take a look at what's going on here and make some conclusions, because it's very clear that the Fed is anticipating more hawkish stance, and the dispersion between interest rates and the market has continued to grow to extreme levels, despite the extreme multiples we're paying on stocks and a variety of other things. So the Fed said, and the market has misinterpreted, that they are going to slow down the pace of hiking. A lot of market participants seem to think that the Fed is done. That's what they want to conclude. The Fed is done. They're done. They're done. Same thing you've heard every single Fed meeting since August, at least, that they're done, they're pausing, they're going to pivot. When do we realize that they're actually trying to fight inflation? Is it tomorrow when Waller is speaking with the IMF, who called on the Fed to continue to hike? Is that when we're going to realize that they're actually going to do what they say they're doing? Like they have the entire time? More importantly, with the hawks leading the situation further? I don't know. But what I do know is the market is viewing the pause as a dovish development. At least the bulls that are there buying stocks are trying to justify it in that way. And I don't think we can do that. I think if we listen to the FOMC conference and we do our homework, I don't think we can come to the same dovish conclusion as those people. And why do I say that? Because Powell made a very clear distinction between a dovish pause or a dovish outcome or slowing down the hiking cycle and what they actually did. What they actually did was a continuation of the change in pace that they've been doing. They started, eased in, to dip their toes in the water just to start the process, then went to 75s because they had such a massive gap to cover. They just had to move. They honestly could have done 100 or 125. It wouldn't have made a difference. But now they have gone from 75 to 50, 50 to 25, and then 25 to skip and 25, and another 25. Why are they doing this? Because unlike before, when interest rates were in accommodative territory and were actually stimulative, encouraging people to borrow money, one can make the argument that they have now maybe begun to enter restrictive territory, very different thing, and they're actually slowing down the economy. So they're not trying to go with 75 basis point hikes when they're slowing down the economy. They are trying to engineer a soft landing. However, they do acknowledge growth has to slow, unemployment has to rise. These are recessionary things, not ideal things. And I think this is incredibly important for the stock market because we've seen earnings decline so far this year, despite positive GDP. And the Fed expects roughly 1% GDP for this year. And we experienced 1% GDP in Q1. We experienced, or above 1% GDP in Q1. We're possibly going to experience above 1% GDP in Q2. So we're reasonably going to see additional slowdown the rest of the year. And if we're already seeing an earnings decline, and we saw earnings begin to decline last year, I see every reason to believe that that's going to continue. And with the S&P trading at a strong multiple and interest rates set to remain in restrictive territory for several years, I don't view this as a positive thing. The full effects of the tightening are yet to be felt. I'm not ready to buy the market at a very extreme multiple. Definitely not tech, which is what I would like to buy. It's where I want to invest, but I'm not willing to overpay. I'm not willing to buy Apple or Microsoft at what is, the highest multiple in a very long time, with the highest interest rates in a very long time, at all-time highs. I'm just simply not willing to do that. I can't do that. We said in 2021 that we liked Apple products. We record our videos on Apple products, et cetera, et cetera, et cetera. I use an iPad. But the stocks are too expensive, and we'll sit it out. And guess what? They had quite extreme falls last year. Apple fell the entire year. It did not partake in the October 12th bottom. So I view these stocks as expensive, and I view the Fed as not a force to be fought. And I think the market is actually actively misinterpreting things, placing a less than 6% probability that they're going to do what they just said they were going to do yesterday. I think that's a little crazy. That's like blatant, disregard for the Federal Reserve. It's not like they put the dot plot out 2 months ago, and we just had a super cool core PCE that showed it finally on a strong downward slope of 2 consecutive months, going on 3. The economy is weak, and that's not where we're at. We're at, as Powell said, a core PCE that is showing no signs of adjusting despite the hiking so far. That's what he said. That's what he said yesterday. Go rewatch it if you don't know that. So I think we got to take them at their word. And I get it. Today, it's really frustrating being, so right, expecting a hawkish Fed and getting the kind of market reaction like we are today. But look at, I view Tesla as the chart of the day. That's all I'm trying to say with that. And obviously, share my frustration with you. Anyways, Waller tomorrow, 7:45 in the morning with the IMF. Look at what the IMF said about the Fed continuing its hikes. That's today's video, and until next time, peace out.